Wednesday, the 17th of August, and the year is 2011, still 2011. And this trend line still holding up very well. This resistance point, well, it's obviously breaking through it. There are many other different points it needs to get above. Again, above this level here, which should make the strength go above 62% is what I'd be looking for. And I kind of wonder if this trend line is one that I'll be talking about again later on, sort of like this one we have in here, which started about a year ago, that was retested when it hit $50, and today this level is roughly at around close to $80 per ounce. Maybe at some point again later on, we will test this again. Now let's have some more fun with another Jeopardy style question. And I will take political quotes for 300, please, Alex. I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is now controlled by its system of credit. And the correct response is Woodrow Wilson in regards to allowing the Federal Reserve to even be in play today. Moving on now towards the 3-day chart, I'd like to take the opportunity to point out that Mike Maloney has made a 90-minute YouTube video regarding his case for gold to be in the area of around 20,000 fiat currency notes. And he uses the word currency a lot. If you want to check it out, it is available on the blog. The video is embedded there from the YouTube channel Why Gold and Silver. Alrighty then. The next thing I want to talk about is that of Webbot. Because there was a time where Webbot was stating that, well, we are going to have a period where we have these $1 days, $1.25 days, which would be followed up by $5 days. Now, they did say up days. It looks like to me the $5 days were down days. And maybe the $5 up days still have yet to come, but they continued forward by stating that we would follow this up with $20 up days that would bring the price of silver to new highs above $55, $60 per ounce. Now, right now, a $20 up day at the area of around $40, 38 in that area per ounce would bring us towards this level. Now, when this was stated, I'm not sure. The video that I seen was from April of this year, and I'll post a link to that video. Actually, I'll throw it on the blog as well. So there'll be two videos on the blog. One from Mike Maloney and one from the April video that was uploaded at that point. But I think it was actually recorded in 2010. I'm not too sure, to be honest with you. I don't follow too much about it, but they are stating $600 silver. And for the same reasons, the derivative markets being as fraudulent as they happen to be. So, all right, enough. That's what I wanted to cover with that. Yeah, that's not a straight line, but as you can see, we do have a variety of trend lines. So you can almost make a case that this is a wedge pattern with an uptrend and a downtrend line. It really needs to break to one side or the other. But I do like right now how it is finding the support level here at this 18 period average, which is very close to the 50-day moving average, because before it was resistance at the 18 period average of closes, and it stayed not only below this line, but below this one. Now we're finding support at the 18 period average of closes and spending time above this line. So we're seeing a lot of bullish sentiments within this. And what I did yesterday on the blog was I put the direction from the 50-day, something I haven't put up in about a week or two. And what this is, it shows the percentage that the silver market is, at least on this one, from its lowest point it has seen in 50 days, which means it's up 20% from that point. And the blue line represents what percentage gain would be needed to reach its 50-day high. And whatever line is on top of the other one is what's in control. Thus, the orange line, the direction from the low, is above, which means that the bulls are in control. And I like how it came right back down to this level and then started to lift higher. If we reduce the amount of periods on here, making it a smaller chart, we can see a little more clearly how this little area is where the two levels met up. And then that trend line that I've been talking about, you can establish right in towards in here. The previous support level right now has been resistance once within this type of chart, or twice, and now getting above it. A lot of bullish signs right now. I also put in another one, and this is how strong a particular market is. When you're above this green line, you're bullish. When you're below this red line, you're bearish. Yeah, so this little market here, which is the daily chart, was bearish for about a day, but it wasn't able to hold that, which of course is strong. And then you have these longer term averages in here, and they're doing extremely well to be above not only the key significant 76, the significant 85, but at the 90. Now, why are these numbers important? Because the first bullish Fibonacci number is 61.8%. But you really need to be above 76.4 to be at a nice bullish case. Above 85 is extremely bullish, and 90% is you're off to the races. So long-term charts, which are long 6, long 7, and medium 5, or the longest term charts, are all bullish. Now what they mean is, what it does, it takes the lowest point over so many periods and the highest point, and it finds what percentage it is within that range. So within the short one, that represents a total of 25 days and a total of 100 days, 300 days, then you got 100 weeks, 100 months, and then after that you have 25 years and 50 years, where it finds the highest and lowest point within it. And the long-term trends are just really starting to come into play over the last few years, showing we could have a lot further upside very soon. Moving this on now to the weekly time frame, and I gotta fix this here right now, so I'll do that right now. And the reason why it needs to be fixed is because it is not 1:34 Central European time. So we'll put in the new time, which is 10:23 in the morning. But time doesn't mean much. It really just gives me a timestamp for when I recorded this section of the video. And just like on the 3-day chart, you have a situation where you were having resistance at the 18-period average of closes, and piercing through the 18-period average of lows has now been replaced with support at the 18-period average of closes, and pierces above the highs. This whole trend, or the whole situation of spending a dozen or so weeks within the sideways consolidation, means that it's done just that. It has consolidated, it has corrected. Markets can correct either one of two ways, or really both ways, and this is another both. For one candle, it corrected through price. And for the rest of the way, it has corrected sideways through time. Now, lately, it is doing better within the correction, but big thing is getting over the $42 level. Now, as far as automated Fibonacci versus manual Fibonacci, I probably should manually put in the Fibonacci mark down here, because if that's the case, then Fibonacci works out right down towards there. And the reason why this one's important is because on August the 24th, which is 1 week from tomorrow, a year ago, that's when the market broke out. And since that point, it has made the nice pattern of having a nice leg higher where it had a small correction, another leg higher, and a bigger correction. That's been the 1-year story thus far. Alrighty, I'm going to end this video right now. I definitely missed a few things, but I'm not going anywhere. Take care.